FICC's PD and MLA rule changes effective on October 30th, 2023, and how they could be connected to the mother of all short squeezes. The PD rule change will add a new margin component, the portfolio differential charge, to the GSD required fund deposit. The PD charge is designed to mitigate the risk presented to FICC by over-period fluctuations in a member's margin portfolio that may occur between the collections of members' GSD required fund deposits. Upon implementation, FICC will use a 100-day lockback period in conjunction with a decay factor of 0.97 and a multiplier of 1.25. Now, we just saw that a subsidiary of Citadel ended up joining the GSD as a member, and follow along with me because this is going to become important. Plus, the MLA rule change will enhance the MLA charge calculation for sponsored members that clear through multiple accounts sponsored by multiple sponsoring members to better align with the position concentration risks arising from such sponsored members. So let's break it down. The FICC is committed to implementing the proposed changes no later than 60 business days after the SEC approval of the respective rule changes. These changes will become effective on October 30th, 2023. So what do we have? How does it correlate? What is interesting about it? Changes relating to the schedule of haircuts for eligible clearing fund securities will be published in the Federal Register October 4th, 2023 and be effective within 60 days. So that passed. NSCC's new VAR charge went into place October 2nd, 2023. So that passed. The SEC just approved new rules around short reporting on October 13th, which we did make a video on, and that passed. Remember, VAR tinkers with the mechanics that would have defaulted Robinhood, Instinet, and others on January 28th of 2021 when AMC and GameStop squoze, or quote-unquote squoze, right? Shorts never covered. The approved rule aims to address the potential increased idionostic risks NSCC might face, especially regarding the liquidation of a risky portfolio during a member default. So Citadel may have a concentrated portfolio, a risky portfolio that has to be matched in case of liquidation by the NSCC. These are basically to handle risks of member defaults. These changes should lead to higher margin requirements for those with short positions in volatile stocks like GameStop because the NSCC was not ready back in January 28th of 2021. You can see right here, Too Big to Fail Clearinghouse had to basically freeze stock buying. If short sellers can't meet their margin requirements, they'll be forced to buy back shares to close their positions, leading to a surge in demand and subsequently a rise in share price. As the stock price rises due to forced buybacks, other short sellers will face margin calls, creating a snowball effect where more short sellers are forced to buy back, pushing the price up further until liftoff. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. I know that was a long intro. Hopefully you guys taken that all in, but the SEC has been implementing a ton of different rules effective in October specifically, as well as the NSCC, FICC, etc. All what seems to be revolving around short sellers, margin requirements, positions getting liquidated, and they're basically creating protective bubbles right now as we speak. So we may be close. We do have a lot of stuff to cover. All I ask in return is please hit the like button. I'm going to try and fly through it as fast as possible so this video isn't too long. Hit that subscribe button, get us to 17,000 subscribers. Let's get into it. AMC is already in 11th place for distribution, which is a beautiful thing to see. The Eras Tour surpasses 128 million, smashing global record distribution. And finally, another piece of good news, I guess, SG Americas filed a massive increase to AMC's position on Friday, which happens to be another fund that potentially spoofs AMC on the order book. And finally, more FUD articles are coming out. Taylor Swift, the Eras Tour film, smashes box office but can't lift AMC. Touching on some more text numbers real quick, 7.6% short interest, utilization at 44%, and the cost to borrow is sitting at 1%, so nothing substantial there. Now on Friday, I told you guys in the video, we are going to get a hammer candle on Monday if this does play out the way I think it's going to play out, and we are getting a hammer candle right now as we speak, down 2% on the day, trading basically sideways at $9.31. Why did I expect this? What is next to come? First of all, we bounced perfectly off that $9 level, and this is AMC before the run up in January, which is exactly what we've been tracking. Came up, fought this trend line, got rejected, a nasty sell off, about an 18% sell off, had that hammer candle before breaking through even higher. If the SPY decides it wants to keep climbing, which we're going to touch on the SPY a little bit later, I see AMC smashing through tomorrow over this trend line, back potentially above $10.75. So just watch that going forward. Of course, most bearish case scenario, we come back down, we retest $8 on this descending trend line right here, or even more bearish case scenario, we come down to that 475 level, that Citigroup price target. Another thing we called out perfectly, GameStop sell-off, trading at $14.36, down 3.75% on the day. It broke broke its support, so don't assume GameStop is just going to come smash right out of the books. I think it's following AMC's sell-off that it had previously, but it's lagging a little bit behind. I see GameStop coming down to $13.40, and I'm playing it down to that until that level is reached. Now, the SEC has approved the iShares BlackRock Spot Bitcoin ETF. Bitcoin gets a disgusting rally all the way up to 29,000, almost 30,000. And then this is a false report. BlackRock Spot Bitcoin ETF wasn't actually approved, and about $65 million worth of Bitcoin was liquidated right after. However, from a technical perspective, we are just testing this trend line exactly at this level. This could not have been drawn out more perfect, right? I didn't move the drawings at all. This is a beautiful test on this trend line. Fake out, breakout. At this moment, I'm still holding my Bitcoin. I'm still continuing to add. Now, before we get into the SPY and some additional stuff to close out the video, pop in the Discord. The link is right under the video. I'm in there on the daily, so you can come talk stocks with me, request videos, post gains, post losses. And whether you're a beginner or advanced trader, this is the place to be. I'm going to leave it pinned in the top of comments or in the top of the description. Next to that link will be the Moomoo link. Once you press that, sign up and make a deposit of any amount, you're going to start earning benefits from there. And I gotta tell you, the benefits are crazy. You get up to a $400 cash reward for transferring stocks into there, and once you deposit, you're getting 16 free stocks, or up to 16 free stocks, each valued up to $2,000 per stock. Plus, level 2 order book data for free, trading options for free, going long, going short, viewing other exchanges, a customizable earnings calendar, and more. So use my link, download Moomoo, sign up and make a deposit. You guys will not regret it. S&P 500 at 436.40, up 1.13% on the day. Not a lot of volume. There was more volume on this sell-off, so be very, very careful with this quote-unquote breakout that you're seeing on the SPY. It's retesting this level, but we didn't get any significant breaks. I wouldn't be surprised if the SPY did get rejected and fell again under 421 before finally making a bottom, before getting that long lifespan of a rally, that long lifespan of a cycle. This isn't the most beautiful breakout I've seen. It's possible, however, just be very, very skeptical with this one. Now, U.S. Treasury Secretary Yellen says America can absolutely afford to fund another war. I don't know if she's batshit crazy or what, but what do you guys think about this down below? And for some reason, we have 21 Fed speeches this week, which couldn't be good, I guess. I'm not really sure. Just watch the VIX. Charles Schwab missed on earnings, so that's a nice thing to see. Also, we have a bunch of bank earnings coming up. If you want to see what I played and just entered into, join the Discord. But also, Rite Aid just filed for bankruptcy after its 61st anniversary. Not too hot for Rite Aid. Finally, to close out the video, South Korea to fine 2 Hong Kong banks for naked short selling. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button on your way out. Subscribe to the channel, join the Discord, download Moomoo. Love you all. Lottery Socks out.